we've seen very large sellers go online with huge web stores having absolutely not considered the payment part. And they feel like, okay, let's just have Visa and MasterCard, and here we go, we sell online. No one apparently told them upfront, but be careful, B2B has different expectation. The amount of the transaction is going to be higher than the card. Maybe they don't want to consume their card limits for this purchase. Maybe the individual doesn't have the corporate card, will have to do an expense report. It's not the best way to grasp the B2B opportunity. So these agencies, these integrators have to bring this topic forward in an early stage to make sure that the merchant has in mind that payment is to be considered as well as part of the project, to make sure that they really will get the full potential of the e-store thereafter.
All right, Özlem, Francois, really appreciate you being here. I think what's interesting about this conversation, a lot of what we do is really centered on technology and e-commerce and PIM and content management and marketing. And today, I think we get to talk about something I think that relates to everyone out there, manufacturer, distributor, whatever they're doing. And because we're going to talk about payments, and payments is one of those things that honestly doesn't get talked about enough up front in projects. It often gets talked about in the back half of a project. A lot of times it's just assumed, hey, we're just going to take credit cards or just put it on terms, but the actual payment. So I'm really excited to talk to both of you and Allianz about what you guys are doing in B2B payments. Maybe we'll start with you, Francois. I'm really interested to kind of hear where, first of all, we have B2B payments and B2C payments. Is there a difference between the two, and what are kind of some of the differences between the two in your perspective?
Thanks, Justin. Yeah, a few statements there. Surprisingly, I would say B2B e-commerce is already 4 to 5 times bigger than B2C globally. So that's definitely a very big opportunity overall. Now, if you put that in perspective with payment methods offered between the two, you will see that in B2C, you're spoiled with payment options. You can use many, not citing any names, but you can guess them all. There are numerous options in retail. When you go to business, then you're basically left with card or bank transfer. So this huge opportunity is still being serviced with quite old-fashioned or not fit-for-purpose solutions. Card coming with some potentially expense for the seller or not fit for large transactions. Bank transfer requiring all kinds of manual work. So that's clearly the opportunity we've seen, which is how can we improve this? Because you can still try to do e-commerce in B2B relying on bank transfer, but then as a seller, you're left with credit checks, KYB, fraud detection, chasing the payment, doing the reconciliation, maybe dealing with a factor or an insurer on the side to secure your cash. So it's very complex and manual intensive process to operate B2B payment today. And we were initially under the view that the B2C players would quite naturally extend their scope to B2B, but none of them has succeeded. And I think that ties back to your question. Underwriting a business is quite different to underwriting a consumer. It's different data sets, different skills, different capital requirements because invoices are quite large. So none of the B2C players has been able to address the B2B requirements, which is where we feel like there is a massive opportunity, providing a better, more digital, streamlined, automated way of dealing with B2B payment online.
Özlem, I read a quote as I was doing research that 50% of all payments are manual. And Francois kind of referenced the manual, and that might be low, right? It might actually be more like 80% are manual. It might be a conservative estimate. Like a lot of things that we do watch in manufacturing and distribution, especially, happen. So much is manual. But why has payments? Why is it so manual today? Like, what makes it so complex that it's kind of forced to be manual and limit these different payment options?
Yeah, thanks, Justin. I think what we have seen in the past was that the payment was the end result of order to cash cycle, and it was left to the accounting department to sort
Mm.
it out. It was not within the suite of a CFO or treasury to do the payments. It was almost like an end result, an operational task that needed to be done. But actually, the payment is the most crucial part of concluding an order. And it has to be seamless because many operational topics pop out at the payment stage. And creating a consumer-like experience, creating a payment journey that is so seamless and easy is making the job done. And this is what the platforms actually have discovered because they were making many things easy for the consumer or for the businesses. They said, hey, here is the payment journey, which is so painful. There are not enough alternative methods. Why don't we streamline this as well? And I think this is why payments are now moving to platforms that are not banks, that are not financial institutions, but that are making transactions very easily for the user. And that's the change we are seeing today.
If I may add to that, B2B is, as credit term in its DNA. As a business, you usually pay on invoice. It's very seldom that you have to pay upfront, right? Any business is normally seeking for payment term. That's the way B2B has always been addressed, which is the absolute opposite of B2C, where you normally would pay for what you order upfront and then receive your goods until BNPL came. So it means that B2B is used to buying on term, but digitalizing this credit granting process and chasing the payment, all of that is very manual. So that's where the complexity lies. How do you streamline your payment process without moving to an upfront payment, which no business is interested in? They want terms. So that's where it becomes complex to automate and digitalize all of this process.
And just to finalize, I think we never had a solution to pay digitally for an invoice until BNPL maybe appeared on the stage. Invoice is the most important part of B2B payments. And to digitize this, as Francois said, was the main pain point that we needed to address. And of course, thanks to our genes within our company, we know how to handle invoice and we know how to handle payments. So the two had to come together.
You mentioned an acronym. We always try to define acronyms as much as possible. Can you define BNPL
Ah.
for us?
Yeah, it's the buy now, pay later, well-known acronym, which is used very common in B2C, which is starting to uh, be available as well in B2B now.
I think what you talked about on the credit side, Francois, is interesting. When often for a new customer that's trying to buy online, getting set up as a customer is often a 4-page PDF that has to be faxed in, and then the return has to be faxed back. I mean, I'm exaggerating a little bit, but talk to me about, so that I think there's a difference in payments from an established customer, online customer, and a brand new customer. And I do want to talk about the offline in a second too, but to talk about that credit establishment, new customer process for us.
Absolutely. When you sell online, you typically expect any potential customer to come and want to purchase from you. And indeed, we've seen very large, reputable sellers taking up to 2 weeks to grant credit to a new customer, which is in today's world impossible because by that time, the buyer will have gone somewhere else to purchase on wherever the goods are available, providing them with terms in a shorter flavor than 2 weeks. But it's indeed a big issue because as a new customer, you have to create your profile. You typically would have to provide some information on yourself. Then the seller, during, of course, business hours, we'll have a credit management team looking into the documentation internally, passing from one department to another, and ultimately, 1 week, 2 weeks later, come back to that buyer saying, okay, you're granted a 4,000 euro, I don't know, credit limit, which you can use on our website. But that means that it's 2 week process, and not only do they need to do credit management on the seller side, but they need to do KYB, because you want to know who you're trading with. It's not only about checking the creditworthiness of the company, it's about making sure that the person that is coming to you is indeed working for that company. Because if you don't do that, you're subject to liabilities later on if payments don't materialize. So it's a lot of manual checks that the seller needs to do before being able to grant credit. And in the meantime, the only option they will typically offer is an instant credit card payment to the buyer. So that's 1 week to 2 weeks process depending on the sellers, and it requires people to look at the data. It requires data providers to source data from. What is the balance sheet of this company? When was it created? What's the credit opinion of such agency and that company? So it's cost, it's people, and it's time, which is very long in today's world.
And KYB, know your business. We have KYC, know your customer for B2C, kind of making sure that the person is and their credit worthiness, and KYB is just on the company side for everyone listening. How does that work? So when we have a credit limit is not, it's different than B2C where so much happens just online, but in a credit limit, it's often a credit limit establishment for both online and offline process, right? It's combined. How do companies kind of think through the, having it established for their business interactions with that company, not just an online credit or offline credit?
It's typically the same. Sorry, Özlem.
No, go ahead, Francois.
For a seller, they would normally consider everything falling into the same credit line because it's ultimately the same risk on the same debtor. And one thing that is absolutely clear is that any seller has to have an omnichannel strategy. It's absolutely realistic to think that everyone will go online tomorrow. Successful companies have an omnichannel approach. So everything we do has to be thought in an omnichannel setup where indeed one buyer can go online, can go in store, can place an order on the phone to his account representative. All of that needs to be consolidated to have the proper view within the credit line or credit limit.
Yeah, I think we do this omnichannel approach for our KYB service. We do help companies to onboard new buyers, but also to do KYB checks on their existing buyers. It could be for their in-store sales, it could be for their offline, business that they have with that buyer, or it could be for purely online business. But what we try to do is to automate as much as possible, so there's no manual workload for the back office of that company.
Who ends up being your customer then? Like who do you normally interacting with in this process?
That's a very good question. What we typically do ourselves is we deal with the seller, with the merchant. The merchant is going to offer us as a payment method, as an additional payment method to their customers, as they would offer a credit card, as they would offer whatever. It's the seller offering this solution to their buyers. The value they get out of it is more conversion, more adoption, increased basket size thanks to the provision of credit. So the seller sees value and is offering this payment method to their buyers. So it comes at no cost and no contractual requirement with the buyer, which is the beauty of it. There's no contractual relationship between the buyer and us. There are other setups that exist on the market, which we're not supporting or keen on, which is a pure lending model. As a buyer, I could be lending money from whoever and use that money to pay my supplier. That's a very different construct, which is really buyer-centric, which is a completely different business, SME lending typically, which is not at all what we are after here.
But what we provide is benefiting the buyer because the buyer gets credit terms real time, in a very speedy manner without any cost on them. So the seller is allowing the buyer to benefit from this.
So at the merchant themselves, so in Europe, I know merchant is often used for manufacturer distributor, especially distributors. In the US here, for those listening, a merchant is a distributor typically. At the actual merchant, Özlem, who is your customer there? Like who's the key stakeholder at the merchant?
So usually merchants or sellers, that would like to use Allianz Trade Pay are the e-commerce payment experts in the company. We deal with different personas, but mostly it's a dedicated e-commerce commercial director. It could be sometimes the CFO or seldom the credit managers, which are more focused on the offline business. But on e-commerce, it's mostly e-commerce commercial growth director or e-commerce treasury head that we deal with. Mostly payment experts, because we are an alternative payment method that's, appearing in the recent years.
Clearly, we talk to the business.
Yeah.
Sales, e-commerce, these guys are willing to grow. Typically, their business targeting SMEs or new geographies. That's the whole point of e-commerce, is going after new customers, new segments. And so it's mostly business development, e-commerce sales that are at the core of the need.
With anything like a credit limit, because it's offline and online, let's talk just about that, like beginning kind of acquisition stage as you're establishing credit. That becomes very, that data has to go back into the ERP. It's not an e-commerce platform thing. It's a ERP thing. So it has to go back into the ERP, get set, and then obviously reflected on all channels, right? Whether they're buying over the phone or buying online. So it seems like there's probably a pretty significant integration need as you establish these different payment methods. Is that right?
Yes, there are multiple flavors of this, but you're totally right. Ultimately, we need to receive data about the order, the invoicing, the payment. So these means that there must be an integration. It can be into the web store alone, itself integrated into the ERP, or it could be directly into the ERP system. But we need indeed this back and forth data flow. Now, there are plugins which we have delivered, which make this integration work very seamless in standard CMS environments. So content management systems. So you have all the typical brands in that space where we typically have plugins making the solution easy to deploy to support this back and forth data flow without the need for API integration. So we have these options. And the last bit of answer is that we now start to offer ourselves the servicing of the payment. So we are able now to track the payment because we handle it ourselves, which allows us to get that data directly without the need for API integration. But data is key.
Let's talk about Allianz specifically and kind of what you guys cover. Maybe we can start with kind of what your ideal customer, like who are kind of your ideal customers, who's approaching you in this space. Are there specific industries that are moving faster than others? Would love to hear either of you, Özlem or Francois.
Yeah, I think typically in the beginning we have seen industries that were closer to platform economies like IT hardware equipment, small machinery sales, but more and more we are seeing all types of industries, including services, food sector, food and beverage, that is quite interested in Allianz Trade Pay. All of the sectors that look for, growth of different type of channels and looking at an omni-channel experience would be interested in our solution. It also depends on how the partners are approaching different sectors because, as Francois said, we work with a lot of partners. But I would say it's many sectors, maybe sectors with a lot of buyers or long tail of the spectrum would be more interested to have a wholesome solution because, covering each buyer of very small size of thousands and thousands of buyers is a big pain point. So we address these type of sectors more. But I wouldn't say there is one or two specific sector. It's like sometimes we do get clients that are working on the freelance economy, for instance, freelancers working with large companies as buyers.
We always talk about merchants, but I would like to extend as well to marketplaces, which is another type of platforms which we are supporting too.
And you guys are a global company covering most geographies, correct?
Yeah, Allianz Trade is global. We operate everywhere. The product we are talking about today, which is this B2B payment solution, is global as well, but clearly we focus on Europe, US, UK, Canada. That's really the focus we have today. We can serve other geographies depending on the opportunities that come our way, but the clear focus is this one.
I want to talk about from the listener perspective. There's a couple of different people that are listening here. We have executives, we have kind of VP of e-commerce at merchants, within quotes, and then we have vendors, agencies. I want to talk about the first. If you're, speak to the VP of e-commerce. What type of questions should they be asking themselves or their organization to consider whether other payment options would be beneficial to them?
I mean, if they go after any new segment of customer, any new geography, if they want to sell direct instead of through intermediaries to their end customers, this will come with massive operational implications, and they won't be able to offer credit to these customers. So they will for sure miss the opportunity. If you only offer card payments and you want to go after B2B, this is not going to fly. So if you want to grow your business, clearly this is something with business buyers, this is a must to have a fit-for-purpose B2B payment option. If you know your customers, you sell online to already well-known recurring buyers, very less so then, because you know them, you're used to trading with them, they pay you with bank transfer on term.
Yeah.
There's little added value other than just maybe automating a currently manual process, but there's no incremental revenue. It's more an efficiency gain that you will get out of it. But if you're going after new buyers or a multitude of small buyers, you need to have a digital solution to operate this for you.
Yeah, I think I was talking to an e-commerce prospect manager recently, and he did mention that it was also buyer driven. Like the buyers were asking, why do we have to pay always by card? Our card limits are up to a certain threshold. We don't want to be, having only one option to pay. Are there ways to pay on trade credit? So this is also requested from the purchaser side. And if one or two competitors are already providing terms, it puts the merchant in a very big disadvantage to provide only one payment option.
Do you see more traction in distribution or manufacturing? And are there differences kind of between the two as you guys look at that?
No, we see both, really.
I think we see both, yeah.
We see retailers, manufacturers, everyone's selling to typically SME buyers. I mean, that's really the typical profile of interested merchants would be, I'm selling to B2B buyers, SME B2B buyers, and I need to streamline and offer a fit-for-purpose solution.
I mean, in some geographies, they are selling through portals, which was the previous probably practice in many countries. And now they want to move to a complete digital experience of selling through the web shop. And that's the transition that would also require alternative payment methods, because you are really bringing something very modern, very sleek, and having different options for the buyer to select.
How do you get buyers to trust that secondary payment option?
Clearly, that's where the brand comes at play. That's today, this market is very fragmented. You see lots of fintechs trying to approach B2B payments in a similar way than what we just described, except that they come with typically a not known brand covering a limited number of geographies. And the buyer in today's world is going to be quite doubtful. What is this about? Who am I providing my data to? Am I trusting this? When you pay to Amex, Visa, it comes with, of course, huge trust. When you pay it's not going to be the same. Where we feel Allianz is bringing this type of trust. We are the number one insurer in the world, one of the top 25 brands in the world. So we feel like we can be a trusted partner where buyers will feel comfortable using us as a trusted solution.
Yeah, I think it's worth talking about that for just a second, Özlem and Francois. As you go through, when I purchase tickets somewhere, I see, the Allianz insurance. So your brand, we're talking about B2B payments, but it's worth talking about that. This is a an offering inside of a very, very large organization that has that trust. Kind of walk through some of the, I guess, the more popular use cases people are maybe know Allianz from in other areas.
They probably know us quite well through our traditional credit insurance business. We have been doing that for about 100 years. Very well known in B2B businesses. We handle about 92% of global GDP. So all of these companies are our clients. So with enterprise businesses, we are really well known as a brand. Now coming to payment space, probably they wouldn't think an insurance company would be a payment provider at the same time, but it ties in so well with our trade credit genes that we can actually move from order to cash and also handle payments with a very trustable brand. So I think it makes really a lot of sense for us to be in this space.
And I don't know how familiar this will be for the audience, but we rebranded to Allianz 3 years ago. We used to be called Yole Amis. And the whole point of the rebranding, because Allianz was owning us already, was typically to build on that famous and recognized brands, because Allianz Trade, as Özlem shared, is the #1 credit insurer globally. But now we are making clear with the rebranding that we are part of the overall Allianz Group, which is the biggest insurer in the world, known by everyone, big sponsor of the Olympics, and a huge brand, which I agree with you. We see when you buy tickets, you can insure your purchase with Allianz partners. So Allianz is visible to everyone on TV, everywhere, as the leading insurer in the world, which is something, of course, we rely on.
So this is a question I have. We've talked about e-commerce. One of the conversations that we're having a lot with executives is that you can't, like, digital transformation has to be the role and responsibility of every leader within the organization. So the CIO has to come up with his own strategy, the CEO, the COO, and the CFO. And the CFO is typically in a very kind of traditional role. And part of that traditional role is, it's very ERP centric in what he does, but it's often not very kind of digital transformation centric. And so we're encouraging those CFOs to build their own digital strategy and have others come behind them and help them optimize it, make it better, and execute on it. Obviously, payments is a part of that. So my question is this. We've talked a lot about the e-commerce side, but orders are omni-channel and being done, and so we have phones, calls, we have emails, text messages. I mean, all these methods are creating orders, yet payments happen in a bunch of different ways too, right? They might happen automatically through ACH, through that invoicing system. But I would imagine that it's not just about e-commerce payments; it's about just payments being done. Is that
Totally
an
right.
accurate statement?
No, you're totally correct. We tend to crystallize the messaging and everything on e-commerce because that's where the need is typically materializing, because the minute you start selling to everyone online, all these issues about the operational capability and everything start to blow to your face. So e-commerce is typically the catalyzer for this. But ultimately, what we do applies to omnichannel. It's all about underwriting the risk, processing a payment, and granting credit, securing the fraud risk, all of that in a streamlined way, which can be used for omnichannel orders.
Yeah, I was reading recently, I think it was on Medium, about who owns the ERP. Because as you said, Justin, previously we would think that ERP was owned by CTOs. But because now ERPs are embedding into so many different platforms, plugins taking part of the ERP's jobs, that it becomes the interest for everybody in the organization. So I would say a CFO of today's world should be really involved with this and to see how the payments should sit within the organization, because payments is becoming more wide-ranged. To talk about collection services, you do the payments, but then you need to chase about, how to collect maybe when it's not paid. You talk about dunning, which comes before when the invoice is due, who's going to chase it. So the work of the treasury manager or the CFO or whoever is owning the ERP today is going to be quite wide ranged.
Yeah, that's really interesting. Talk to the other audience we have are software vendors like B2B e-commerce platforms and PIMs and the agencies and system integrators that support them, right? So these guys are all doing the work with these customers. Talk to that group about what they should be looking for, because while the VP of e-commerce is great and we want them included, often it's the consultants and agencies that understand some of these problems in a broader way. Talk to them about how they should be thinking about, relationship with you or just generally about payments.
That's a very valid point. And we've realized some time ago that these are key intermediaries for us because these guys are at the forefront of supporting, advising sellers with regards to their omnichannel sales strategy, typically e-commerce. And at some point in the journey, they should advise the merchant about the payment part, which is typically overlooked. We've seen very large sellers go online with huge web stores having absolutely not considered the payment part. And they feel like, okay, let's just have Visa, MasterCard, and here we go, we sell online. No one apparently told them upfront, but be careful, B2B has different expectation. The amount of the transaction is going to be higher than the card. Maybe they don't want to consume their card limits for this purchase. Maybe the individual doesn't have the corporate card. We'll have to do an expense report. It's not the best way to grasp the B2B opportunity. So these agencies, these integrators have to bring this topic forward in an early stage to make sure that the merchant has in mind that payment is to be considered as well as part of the project to make sure that they really will get the full potential of the e-store thereafter.
Yeah, and I think that's really what is really good about B2B e-commerce association, because you guys are bringing in all of the ecosystem players together to share knowledge and to share what exists out there to make the life of a business, better, to see different alternatives in terms of payments, I would hate to probably lose a client because I'm not offering enough payment methods at my checkout, right? But for this, you have to have the knowledge, you have to know who to reach out to, and all of these partner ecosystems play a great role because they can be an advisor, as Francois said, to a treasury manager who was probably using only credit cards because this is what he had seen previously in his company. So yeah, we all have a role to play, I guess.
Once you get the business side of it, everybody understanding what it is and how it kind of flows through, how hard is this execution to put another payment method on their, in their current process?
So as mentioned earlier, there are basically two ways. Either they use a standard CMS system and we have a plugin ready to go, where basically it's just like installing an app on your phone and some minor setup and you're ready to go. That's the ideal path when you're using a standard environment. Large corporate will typically have some level of customization required there. So we have the same capability over API, which will require some integration. It's typically 5 connections. So it's not a major project. It's searching the company, validating an order, validating an invoice, accounting for the payment, or filing a claim in case of non-payment. So that's very easy to integrate. It's a few weeks of a project once the IT department is available. So this is something that we can offer one of the two ways.
Let's talk about the process a little more. So I don't think it's very clear to me, like what are all kind of the steps that happen in this order to cash kind of process that you have. Can you guys lay out, maybe you, Francois, lay out kind of the different steps that are involved?
Absolutely. So first of all, typically most B2B web store require the buyer to create his account before they can put anything in their basket. I'll come back to guest checkout later, but typically the buyer will have to create his account on the web store. There we have our APIs directly allowing to search for the actual company data. so that the record is clean from the start with the right name, address, registry number, whatever. So all of that we will empower directly in the web store so that we know it's a clean and good data quality in the CRM. Then we're going to run our own credit check on that company to see whether it's going to be eligible to credit. That's the buy onboarding step. Then that customer will come, fill his basket, go to checkout. At that very moment, we're going to assess if that transaction fits on the one end our risk appetite and on the second end our fraud appetite. So we're checking if that specific transaction is a risk we are ready as Allianz Trade to cover and then to accept. And then after that risk assessment is conducted and all of that occurs very in real time. At the same time, we're assessing the fraud risk of that transaction. Is the user coming from a trusted website, email address, VPN, computer, all of that looks relevant. Then are the goods to be shipped to the company address or to another address? And we are running a real-time scoring of the fraud risk of that transaction. And based on the fraud risk, we might require confirmation from the user, like a one-time password or an ID verification, just to make sure that it's all legitimate about this transaction. And then if that's all agreed, we're going to accept the transaction. So the user will see his order as accepted on the web store and he can leave. Everything will then be automatic. What does that mean? The seller will process the order. The next day, typically, we'll ship the goods and send the invoice. Then we're going immediately to track proper payment of that invoice by sending reminders to the buyer, by chasing the payment until the due date, let's say 30 days. The buyer will hopefully trigger payment thanks to our reminders. We are then going to see the money coming in, do the reconciliation, disperse the money to the seller. All of that fully automated by our solution. So we approve the order and we track it until completion and repayment from the buyer. So that's why we call it really the order to cash solution. That's the typical value chain we cover in a full digital way, meaning there's no human being needed on the merchant side to operate any of this. Now, some sellers might require some upfront payments for that order. Instead of waiting for the buyer to repay in 30, 60 days, whatever, some sellers are at times interested in getting paid immediately. And that's where we have different options to support that risk or that need, as well.
And that's typically called factoring. Is that right? One of the words that we use. Okay. And
or digital factoring, yeah.
And do you guys actually provide financing to the sellers?
Yes, this is something we are working on. We have financing partners that do support us in the financing to the seller. So that's part of the proposition that we have. This ties in with what we do with banks because we have some global bank partners who have, of course, large manufacturers or sellers as their clients, and they would like to propose Allianz Trade Pay as a solution to these large sellers or enterprises, and also they do the financing. Traditionally, banks are, quite commonly doing receivable finance programs, securitizations, and they call this new method through us point of sale financing. Which allows a lot of buyers to benefit from the solution. So banks are kind of our partners in.
Are your partners?
Solution.
Yeah, that was actually a question I had earlier because it feels like you're both playing in the finance, but it seems like you're complementary that you add services to the banks as a partner versus competing with them.
Absolutely, banks would typically or factors would typically only do so when they know that the risk is insured. Mm-hmm. So we really come hand in hand to the merchants saying, we're going to cover the risk based on which the factor is going to be happy to purchase the receivable. It's very unlikely that a factor would just advance the money without any collateral. So that's where we come in. We secure the risk, allowing the factor to provide the upfront payments to the seller.
I guess I have kind of a one last question here, which is, the whole process you described there, Francois, of KYB and instant credit decisioning and getting the payments all good. what happens though when they don't pay?
So that's indeed the typical risk that we are here to cover as a credit insurer. So we will do our best to handle the money flow. Should things go wrong, we stand in and we indemnify. That's really our core value proposition, is that ultimately the seller will get paid. That's our business. We will chase the repayment. We think we have a big leverage to obtain repayment from the companies. And if we anyway can't, that's not a problem. We are going to indemnify no matter what our customer, because the transaction has been accepted at the time of the order. So it is covered no matter what. In case of non-payment, we will stand in.
So you guys are basically guaranteeing the payment at the moment of accepting that order from that customer. You're saying the seller will get paid for this, and then you kind of stand in the gap between those two.
Exactly. That's the whole point. Is we allow them to provide credit to their buyers with us fully owning the decisioning and the risk of non-payment. So this is a facility they're offering to their buyers with obvious benefit in terms of working capital requirement for the buyer, but the risk is on us. It's not on the seller.
Is there a fee exchange in that process as you work through that?
Yeah, obviously, we charge our service just like any payment method based on accepted transactions or processed transactions. So every time we accept to cover a given transaction, meaning our solution was selected by the buyer online and our payment method was used, we are going to charge a percentage of the amount of the invoice to the merchant, just like any other payment method.
As
Flat
buyers,
percentage on any transaction.
as buyers, if buyers, let's say a buyer's using this on a regular basis, this becomes their standard way of making the purchase. They use the Allianz side of this. Is it an easier process? Like once you do the first one, probably there's a little more information obviously to fill out, and then the second order, does it get easier as they progress down there?
So we try to avoid friction at all, meaning that even the first time, we are going to make our decision based on the data we have on the company, which we can source real time from all our data providers. So in most instances, the buyer will not have to provide anything.
Oh, wow.
It will just be a real-time decisioning where the order will just be accepted immediately. It won't even see us. Then if we detect some suspicious of risk, we will ask a one-time password, which is a very easy and commonly accepted way of checking your identity. We send you an email, you give us the code that you've seen in the email, but there's no such thing as uploading documentation or whatever. This is really meant to be without friction for the buyer, who is having no contractual relationship with us, who is not paying us in any way. So it's very easy for the buyer.
I think I missed that part of it in this discussion. I think it's a really critical thing. So, when we started this, we talked about kind of the credit process, the 5 pages of PDF, and you're going around that whole process saying we can gather information about this user and their company through our data sources, match them away, do a credit decision with limited information or no information. If we need more validation, we do things like one-time passwords and kind of ask other information online. I think that's a very, very kind of cool process.
Absolutely.
To walk through.
And this alone brings value because doing the KYB
Huge.
in a full automated way and the credits decisioning in a full automated way is a major relief for sellers versus what they have to do today.
And of course, getting the indemnification in the end instead of writing off a debt is something great as well.
Yeah, that's incredible. I mean, I think so much of conversion ends when you've got a large, or I mean, even 5 or 6 fields to fill out becomes kind of a painful process, especially if you're doing it on a phone. So that's pretty incredible. This is an amazing conversation, Özlem Francois. I really appreciate you being on and explaining this mainly to me as I learn this area, and I'm sure the audience appreciates it too. How should people get a hold of you guys and learn more about your solutions? From practitioners to potential partners.
I mean, we're happy to be approached via LinkedIn. You have our names.
Excellent.
Very easy to find us
Yeah.
and reach out to us. We will provide a URL where people might find additional information about the product and who to go to. but any channel is good for us.
That's great. We'll put that on the inside of the video as well as the on the blog page as well. Francois, Özlem, thank you so much for being here. I really appreciate your time and your knowledge today.
Thank you so much,
Thanks,
Justin, for hosting us.
Thank you for having us. Yeah.
Manufacturers, distributors, leaders in the zone. If you're building B2B, this the podcast throne. The industry's heartbeat, we're setting the tone. Turn insights to actions, it's how empires are grown. We're talking change management, breaking resistance. Strategies so sharp, they redefine persistence. Customer adoption, it's more than retention. It's building a movement, commanding attention. It's the B2B e-commerce show, where the vision is clear and the strategies glow. From the top of the globe, where the pros who know turn the volume up loud, it's time to grow.
We bring news, big topics, insights to spark. From the boardroom's glow to the warehouse dark. Digital transformations, the path we're paving, helping you lead through the change you're facing. This is more than a podcast, it's the industry's voice, giving you the tools to make the right choice. No fluff, just facts, no hype, just action. The show where solutions are more than a fraction.
It's the B2B e-commerce show, where the vision is clear and the strategies glow. From the top of the globe, where the pros who know turn the volume up loud, it's time to grow.
This is your guide to the digital race. Practical advice, no time to waste. So tune in, gear up, and let's own the space. It's the B2B e-commerce show, the industry's made.